Good morning, everyone. This is Srikant, Rajan, and welcome back to the Stock Market Podcast from MP-186.com, the only community where you get guided assistance to invest in stock market, bonds, mutual funds, fixed deposits, and all kinds of insurance. If you're not a part of this amazing community yet, do visit our website MP-186.com to join the free investment community. Now, coming to the stock market yesterday, what a bull run it was. In fact, we opened with a big gap up, and not only did it start with the gap up, but then the market continued to rise. In fact, till the first half of the day, we could see a continuous rise in the market. Of course, the FIAs definitely were on a buying side. So, that huge buying, and from there, in the afternoon started the volatility. It actually came down, almost came down close to the day's low, and from there again recovered. So that's something that was, looking strong there. So 1880 actually looked a very good support. So from there, we could see it rising again, and finally it closed at 18,145. The DIIs and FIIs are still on the clash. Yes, so FIIs have continued to buy. They bought for more than 2,600 crores, whereas the DIIs have sold for almost 700 crores. So definitely it's a good thing that DIIs have actually supported the market for so long. So they are actually booking profits there. And if you look at the FIIs, they are buying big. So the day first trade is 4,000 crores, now it is 2,600 crores. So overall, they've been buying big also. But then how long is this going to sustain? That's something very important. Now, today being a big event, now it is very important to look at how things can turn in the US market. Now, if you look at the US market yesterday after the Indian markets closed, we could see the US markets jittery. Yes, we could see a gap up opening in the US market yesterday, but then that could not be sustained and there was a continuous fall. And after the fall, there was a volatility, and that volatility continued till end of the day. So all the US markets have actually closed in the red yesterday, but still, amazingly, SGX Nifty was continuing to trade in the green. Yes, it was trading at almost 18,300 yesterday. Later on, it came down to 18,250, then 18,200, but still, it is trading around 18,200 range. But now, of course, the way we have been seeing that, we've been almost opening almost a 100-point gap down from what SGX Nifty is indicating. If that is the case, probably we could see a flat to slightly negative opening today, which would be good for all those members in the Gold Club who are actually sitting with some minor, losses in their call position. So that's something probably could be taken off today. So that's something that we will watch out for. So apart from that, if you look at what happened yesterday, the US markets, the tech sector continued to fall. We could see this, Amazon continuing to fall, and same with the Meta. Google also is at an all-time low. So if you see Meta, which is Facebook, and Alphabet, which is the Google, and Amazon. So these are three stocks which is actually in the negative now, a big negative territory. I would say they are at 52-week lows. So that's something that needs to be noted. So in this kind of situation, so the markets are kind of oversold in the US, and if the Federal Reserve actually comes out with bad news, then probably market could fall further. But then if you see not much fall, I would say in the US, but if at all it comes with good news, we could see a big rally upwards. So that's something that need to be watched out today. So tonight, any call positions to be held closer would actually be dangerous, because we might even see a big gap up opening if the Federal Reserve comes out with some good news. But if there is a bad news, we may not see big fall. So I would say the downside might be limited, but upside can still go up. So that's something that can be noted for today. So if you look at, apart from that, there were important results that came up yesterday. There was Tech Mahindra, Nykaa, and Adani Ports coming out with results yesterday, which was very important. So among that, I would say, let me start off with Nykaa. Nykaa reported almost a 300+% return or higher profits compared to last year. So that was something really good, and that was expected. And we had already holding it, and we could see the Nykaa actually rallying. In the last 2 days, it's rallied up more than 22%. Of course, there is some fear of the anchor investors in divesting from Nykaa, which comes in after the locking period of 8th to 10th of November. So that's something that needs to be watched out. But still, I would say Nykaa is still in a better position. Let me see if I can make a video on that, why Nykaa is looking better. Probably that can give us a great understanding on that. So apart from that, we could see if you look at US market. So in the US market, the jobs data did come in, and the jobs data has come out good. That means there is more demand for labor. So now this is what is puking the investors, because if there is more demand for labor, that means the economy is doing good and they want more people. Now, if they want more people, the job is going to increase, and that is only going to increase the opportunities for the people and hence the wages. So that is something which is not looking good. And because at this point of time, any good news in the economy is actually considered bad news, because a good news in economy can mean that the Federal Reserve gets more space to increase the interest rates. So that is something which is kind of confusing the investors right now. If the economy is still not weak, then when? So that is a big question mark, because US has a big target of reaching inflation rate of almost 2%, which is just about they have to come down by almost 75%. 75 to 80% inflation has to come down. Now that's not easy with this kind of economic data. So that's something which is kind of confusing the investors right now. Apart from that, if you look at Europe, things are looking bad. In fact, yesterday the Purchase Managers Index, the PMI data came in for UK, and it has actually been contracting at and it has reached one of its lowest in multiple years. So that is not looking good. Of course, Rishi Sunak has a lot of activity to be done, and he's got big challenges ahead there. But then the good news is, with all this bad news across the globe, India PMI has actually gone up. Yes, the Purchase Managers Index for India also came in yesterday, and it is actually gone up from 53 to 55%. That means the manufacturing sector is doing really good, and the outputs are increasing. Not only that, the GST data also has been continuously giving more than 1 lakh crore collection in GST across the country for last so many months, which is making India stronger, by the way. So that's something looking good in India. After that, if you look at Indian market, we could also see the auto sector gaining popularity. So auto sector has been doing good, especially with the sales numbers coming out. Of course, sales has really gone up in all sectors, or I would say most of the companies. So if you look at Eicher Motors sales have gone up by almost 86% compared to last year. Yes, so last year they delivered about 44,000 vehicles in the last month, that is in October, and this year they've delivered almost 86. So that's something really looking good. Similarly, if you look at next good news, I would say there's a new stock that has come into our radar, that is Tejas Network. So Tejas Network has received a manufacturing order of a lot of networking products, and this is going to come under the PLI scheme, the Production Linked Incentive Scheme of Government of India, which is actually something that needs to be watched out, because that's going to be real benefit to the company. And they also have some expansion plans. So all of these things could actually bring the stock to our radar. I'll definitely inform you in the community when I would be entering the stock. Apart from that, we could see Infosys rallying yesterday. In fact, if you see yesterday, pharma and IT stocks were something which was on the rally yesterday. Especially, we know the IT sector has been on oversold zone, and they've been trying to recover a lot. So, if you look at the important result also which came yesterday, Tech Mahindra. So, Tech Mahindra was one stock which has come almost 40% down from its all-time high. And in the last 1 year, it has come almost 42% down. So, at this point of time, it actually is looking really valuable. That is, in terms of valuation, I would say it's really good to enter. We already have our good positions there. Now, yesterday's result, what happened? So if you look at year on year, they could see a profit decline. Yes, almost a 4% profit decline in the Tech Mahindra. But then that's completely okay. You know why? Because the economy itself has changed so much. The inflation is so high. And still, the profitability has gone down just 4%. It's kind of okay, I would say. It is just good. But something really good is the revenue has gone up. And the best part is attrition levels have actually gone down. So, it has actually gone down compared to last quarter, which was at 22%, has come down to almost 20%. And they've almost hired more than 5,000 new people. So, with all that, and also the order book is looking really good. So, they've got really good orders from, US and Europe. Majority of them from US, which is more than 53% of their orders. And the best part is their clients have actually increased year on year. So, that's something really good. So not only year on year, even sequentially quarter on quarter also their clients have increased. So I would say it is definitely a good result. Now, how the market behaves. So for example, markets cannot be trusted. We could see the market probably falling down. Or the Tech Mahindra stock falling down or up. If it falls down, definitely opportunity to add more. But if it is going up, then definitely we are happy because we are already holding it. So Tech Mahindra is a good stock to be watched. So let's see how Tech Mahindra performs today after the results. So these are few things to be looked at. Apart from that, Infosys rallied yesterday. So majorly because they've taken the investors nod for actually doing the buyback. So they have announced a 9,300 crore buyback, which is going to start from tomorrow, November 3rd. So definitely, probably we could see Infosys share share prices going up. The maximum price limit they've set for buyback is 1,850. So right now it is close to 1,560. So definitely we could see it going up. So that's something that could be watched out for now. So let us look forward to some power coming in from IT sector and also from Reliance. Why Reliance? Because the government has actually cut down on the windfall tax, on the crude oil, and diesel exports have also taxes have been reduced. So that can be good for refining companies like Reliance. And if Reliance and IT moves, we could see some move in the market. But then, what is more important is the FIIs. If will the FIIs continue to buy today because of the big event today? If FIIs think of selling, then we could see the market going down. So I would say if the market opens flat, there are chances the market can actually go up further if IT and Reliance moves up. But apart from that, if the FI is going to selling, there are chances it can go down. So let us see who will overpower the other, and that's how the market are supposed to move today. Of course, it has been a little long report today, but then yes, I had to cover all these important things today. I hope all of you enjoyed watching it. So do press the like button, that actually motivates us. And if you love the content, do share this with your friends and relatives to help them learn and invest together with us. With that, this is Srikant Rajan signing off. But before we leave, do remember to press the subscribe button if you're not done that yet, and do press the bell icon if you want to be notified whenever we go live on our channel. Have a great day. Wishing you a profitable week ahead.